Okay, thanks very much, David. And it's always appreciated to be here at Timing Research World. So these are always the best webinars. And tonight, what I'm going to talk about here is the 7 steps to better trading results. Now, I'm a big believer in visuals. And what I want you to think about this first slide is this is a journey. And the problem is it's kind of like that line from the Karate Kid, you know, walk right side of the road, you're okay. But if you step off the road, in so many words, you get squished like a grape. And this is what happens with the market. I think there's a very, very narrow path to success within the market. Over time, you can do well for a short period of time, and then what you're going to run into is one of the things that I talk about today. So if you want sustained, consistent success over time, follow the 7 steps, and eventually I think you'll arrive at a career. So that's what I'd like to share with you guys today. And again, I think there's going to be a lot of visuals. There's going to be a lot of things that you will identify with as I go through this. And most common comment that I've heard from people is to say, how did you know? I thought you were talking about me. So here we go. 7 steps to better trading results. Again, my name is Doc Severson. I've been an individual trader and performance coach since 2005. So I'm coming up on 20 years now. And the current services that I help people through is through either 12-minute trading or ReadySetCrypto.com. You may have heard of me in the past through services like ReadySet.trade or OptionsMD or TheoTrade or Doc's Trading Tools or even the original Options Linebacker. And my specialties are fractal price analysis, so that's multiple time frame price analysis, options and futures strategies, and then because I had to overcome my own liabilities, I had to learn to get past that point. My specialty is understanding the trading mindset and what it takes to be successful with that. So as a kind of a consequence of that, I've written a couple of books that are available on Amazon. Hacking the Holy Grail is more about what we're going to talk about tonight. Cracking the code of profitability. How do you become profitable and stay there over time? Hacking the Holy Grail on Amazon. And then if you want to know more about multiple time frame price analysis, how do you use multiple time frames to understand exactly what's going on under the hood of the market? That's my book, Fractal Energy Trading. Again, both available on Amazon. Okay, my purpose tonight. So again, I've been trading the live markets for over 20 years, actually more than that, 30 years or so. I've made every mistake in the book, guys. Much of what I'm sharing today was learned by necessity. I had to fix something before I could become profitable. And if you're like most people, you'll become profitable for a while, and then something will happen to you that makes you kind of stop and assess and reassess of what's going on. And if you've ever read the classic book, Reminiscences of a Stock Operator by Lefevre, about Jesse Livermore, it's very much the same way. He would do really well, and all of a sudden he'd get, his rear end handed to him with a huge market lesson. And so he would dust off, recalibrate, and try it again, never making the same mistake twice. So I went through the same journey everybody else does. And what you find is that you're not really trading against the market. You're trading against yourself. It's very much of a self journey. So my purpose today is to help you understand why you've been your own worst enemy and what you can do to start today to fix it. Okay, so that's my purpose. That's what we're going to do in today's session. Or if you're watching this on a replay, could be in the morning. So what's the problem? I'm an engineer, or at least a former engineer. And so we always start everything by saying, what's the problem? What is the gap that we're trying to close here? What are we trying to address? So the problem that we're all trying to solve is to improve our financial performance and financial independence. Challenges that you encounter depends on where you are in this progression to mastery. So I'm going to borrow something from a gentleman up in Maine by the name of Bo Yoder. And he came up with this thing called a trader progression. This sort of a defined progression towards your skill set as it goes to the upper right. And so we're going to start off with the stage that everybody does called mystification. You're brand new. You don't know how markets work. You view trading as fun and exciting. Can't you spot people like that today? So more than likely, they've joined during the end of a bull market. So you're unconsciously incompetent. You don't know what you don't know yet. But success comes easily. And making money seems simple because you're just putting it in. It's like fishing in a trout pond. You're sizing a Lambo for your garage. You go all in with everything you have and you get crushed when the markets turn. Everybody goes through this. This is the way that most people enter the financial markets. That is the mystification phase. And from there, if you survive that, you get to the hot pot stage. You got crushed, but you're hooked on the markets. You're absolutely hooked. You start to define your approach and you start to learn how markets move. This is when you become a student. So you wait for your setup, you wait and wait and wait, but it's like touching a hot pot on the stove. You get burned every time you enter and you start getting timid. You start trading not to lose instead of to win. So you decided the problem is the strategy and not you. So you keep trying different strategies with the same result. This is what I see people do. They'll sign up for a program. They'll invest into the program. They'll read all about it. And then they take a couple of trades and those don't work out. And so all of a sudden they see this other bright, shiny penny, this other program that's out there for sale. And oh, that looks really easy. And it looks easy to make money with. And look at all the money that they made. So you go thundering over to here, sign up for this one, invest a bunch of time and money into that, do the same thing, take a couple of trades. They don't work out. So you're like, well, hey, look at this thing over here. Look at this bright, shiny penny. And so we just keep running around from program to program. And instead of getting 10 years of experience, we get 1 year of experience 10 times. And we never really attain mastery like this. This is the hot pot stage that a lot of investors get caught up in. Then we get into the cynical skepticism stage. I can always tell when somebody's into this one. Every time you enter a trade, you lose. In fact, you start to joke with your friends, hey, take the opposite side of the trade whenever you hear me, so maybe you should take your own advice with that. So you're convinced that it's somebody else's fault, though. The Fed, the market makers, the brokers, the gurus, high frequency trading, whatever. There's always somebody else that's to blame for this. You can spot these people a mile away because they've got this cloak of negativity that they're immersed in. And you got to stay away from people like this because they will affect you. And some never exit this stage and they quit. Can't handle it because they never solve the problem. They don't realize that it's them and not the market that's the issue. If you survive that stage, you get into what's called the squiggle trader stage. You may recognize this. You can spot somebody that's in the squiggle trader stage from a mile away because if you look at their charts, this is what they look like. They've got a million studies on their charts. It looks like something out of the Museum of Modern Art. So you buy into the notion that there must be some holy grail study or technique to trading success. Right. So we're vulnerable to this. If somebody comes on and says, man, you got to have this study, or you've got to be using this chart study or this style of trading. Otherwise you won't make any money at all. And they're very, very good at, sorry about that. Very, very good at presenting that, but it's not true at all. If one chart study is good, then 8 of them must be better, right? So unfortunately, you have so many competing trailing studies on your chart that become paralyzed. This is scared money in action. I would say the majority of people that I encounter are stuck almost perpetually in the squiggle trader stage. They're looking for that magic holy grail. They think they just haven't found it yet. They'd be surprised to find out really the holy grail is between your ears. That's the whole point of my book. And In stage 5, the inwardly bound stage, this is where they begin to understand what's going on. Traders that survive all of these, somehow they get past the squiggle trader stage, and then finally they understand the concept that, hey, maybe it's not the charts, maybe it's not the markets, maybe it's not the guru, maybe it's me. Those in this stage finally understand that the holy grail of trading is not some study or chart pattern strategy. It's their ability to understand that trading edge starts with them and their ability to think differently from the rest of the investing herd. If you get all of your ideas from a Discord page or some kind of Facebook group or something like that, you are doing social investing. You will never have any edge if your edge comes from a group. This is why it's so important for you to think independently, and you can't do that in a group. In fact, we are biologically meant to seek others and the opinions and the acceptance of others. That's the way that we're wired. And so if that's the way that you're going to continue doing things, then you'll get the same results that you always have. It's only when you break away from the crowd that all of a sudden you get into this inwardly bound thing like, hey, maybe the secret is me. And those that finally get the secret will eventually attain mastery. This is the final stage of progression for a retail trader where they've mastered their setups and especially their reactions to market risk. They don't see market risk as an oh crap moment. It's more of a, oh, look at that. That's really interesting. How can I take advantage of this? Trading is very easy at this level, so trades literally come to them. They're just waiting for the market to move so they can jump. It's almost too easy. And it's so frustrating for somebody that's in a lower stage as they can't understand it. They haven't gone through the same progression. So you may come to me and say, hey, Doc, that sounds great. I'm currently at cynical skepticism, or I'm in a squiggle trader stage. How can I want to skip right to mastery. I want to skip stages. Everybody wants to do that. I've never seen anyone skip a stage due to the way that our brains work. I have seen some exceptionally committed traders minimize their time in the earlier stages. One gentleman in particular was a supply chain expert and broke everything down, broke down the process of trading into a supply chain, and was actually very honest with themselves and were able to see what the liabilities were and how to get around them. And it was amazing to watch the transition from, I literally heard the guy say, we used to be on we used to be on an intercom, live intercom all day long. And he'd say, well, here goes nothing. And if that's your message to yourself, here goes nothing, then that's exactly what you can expect to see in that trade. And literally 2 months later, all of a sudden, he was highly sought after because he did not lose a trade. This can be done. You can't skip stages, but you can minimize your time within this stage to become a master. So let's see how we can do this. That's the problem. This is sort of the landscape that we're dealing with. That's the journey that we all take. How can we minimize this? And this is how I've got it broken down into 7 steps. All right, step 1. I want you to think differently about risk. Has anybody seen that that documentary of Alex Honnold? Honnold, or I think that's how you pronounce his last name, as he climbed up the side of that mountain in Yosemite. Incredible. If you haven't seen it, please go see it, because this is important, how he views risk. Every interviewer that was part of the documentary saying, how can you do this? Literally, the guy climbed up a 3,000 or 4,000 foot mountain, which is a sheer face of granite with no ropes whatsoever. It's called free climbing. The name of the movie is called Free Solo. If you haven't seen it yet, even if you know how it ends, you'll be sitting there squirming as you watch this thing. Like, how can this guy do this? And it's a great lesson for us. Also, the I'm trying to think of the name of the documentary, but it was the guy that did the tightrope walk between the Twin Towers in 1974. I'll think about the name of it, but it's an incredible documentary. It's about somebody that had this vision and he wanted to see the vision through. He didn't think about the risk. All he thought about was how great it would be to do this, to be the first person 1,400 feet up in the air to walk a tightrope between the Twin Towers. So when I say to you the word risk, what do most people think about? What do you think about? And if I were to talk to you in person, most of you out there, we are conditioned to think that risk is bad. Starting when you were very young, everyone around you has been doing everything to protect you. Oh, don't go out with that person. That person's risky. Society, your family, everybody has been trying to remove risk from your life. So we come to trading and we have the same attitude. And in fact, that's usually the first question that somebody comes, a potential student will say, hey, Doc, can you, I'm excited to get started. First of all, what is the least riskiest strategy that I can get started with? And my answer to them is always the same. It is, well, there's certificate of deposit. And they're like, no, I mean a trading strategy. Well, that would be a trading strategy, is to put your money into certificate of deposit, zero risk. In fact, the only risk there is opportunity risk because it's less than what you can earn elsewhere. So we all learn this, so risk is bad. This is the way that we grow up, and then we expect to be different when we get into the market. This is one of the things you have to change. You have to view risk differently. And because of that, we trade not to lose. Have you ever done this before? Everybody does this, right? Think of the last time you saw a sports team. The one that sticks out in my mind is the Atlanta Falcons and the New England Patriots in the Super Bowl. And this was, gosh, it must have been 10 years ago. The Falcons were up, I want to say it was 28-3. Somebody correct me if I'm wrong here. I want to say it was 28-3 at halftime. And I remember saying to the people around me, we're watching the Super Bowl, oh, this is going to be a blowout. And I'm like, don't ever count out Tom Brady. And sure enough, he comes back and they win. So that team, the Falcons, played prevent defense. They played not to lose. They played not to lose. So new retail traders don't trade to win. They get into a trade and they say, all right, how can I not lose this now? Because they're scared of losing. It's scared capital. So instead of being confident in trading to win, they're trading not to lose. I just want you to be aware of this for right now. We'll talk about ways to fix this later. The problem is, guys, the fear rules our decisions. You've heard about fear and greed. I don't think it's fear and greed. I think it's 100% fear. We focus on what we fear. What we focus on expands. If we focus on not losing, what do we get? We fear that rallies will leave without us. FOMO. I was hearing that today from people. Doc, what can we do to get on this trend? And my answer is wait for the pullback. What if it doesn't pull back? Are you telling me that this is never going to pull back? That this market will go up in perpetuity every single day for the next year? Yeah, but what if it takes a year? I don't think that's going to happen, right? So we have fear of missing out. We fear that sell-offs will destroy our account. A month ago, we all had fear of loss. Fear rules every retail investing decision. Greed rarely comes without the experience and the hubris of that experience. And then there's the expression, eat like a bird and crap like an elephant. I was guilty of this. So because we're trading with scared capital, we take small profits off the table. As soon as we get them, oh, there's a profit. Take it off the table. Book that profit. What's the expression? Nobody ever went broke taking a profit. Yes, you can. Because you can ride that losing trade down the rabbit hole. And often we do. Oh, I just know it's going to reverse. So-and-so said it was going to bounce. Well, it's just a paper loss. It's not an actual loss until I close the trade. So we eat like a bird and crap like an elephant. When we take losses, they're huge. They're enormous, and they wipe out lots and lots of little gains. So that's the way all of us trade. Also, the other thing is we're all looking for less risk, right? We're all looking for less risk. How can we reduce our risk? Well, guess what? No risk it, no biscuit. If you want zero risk, you get passbook savings, you get certificate of deposit, no reward. More risk should lead to more reward if you can manage it. So what comes with experience is your ability to better assess risk and better manage risk and use it as a tool and not something to run from. And then this one's just terrible. I see this all the time. We wait until something feels good. You ever notice that you wait for a trade, you watch the setups, you watch the setups, you watch the setups, you pass, you pass, you pass, you pass. And then all of a sudden everything lines up perfectly. You're like, this is it. This is the one I've been waiting for. This one really feels good. This almost always means you're going with the crowd instead of thinking independently. This is why these do not work. This is why trades that feel good are usually the ones that perform the worst. Conversely, the best trades that you will ever take are the ones that you'll almost need an air sickness bag once you finish entering. Your attitude will be, well, this is going to be a waste of money. And ironically, those are the ones that work out the best. Okay, so we're thinking differently about risk now. We need to think about risk being our friend, a tool, not a foe, not something to avoid. We'll learn that taking trades that feel bad means that we're trading against the crowd, and that's almost always a good thing. Okay, so step one, I want you to think differently about risk, and I want you to start that tonight. Start thinking about risk differently. Look at everything that you do on a daily basis, whether or not it's driving, family life, anything like that. Look at the risk and reward of every situation and start being aware of how risk can be a tool to you. And this is why some people that embrace risk end up doing well, while others that stumble into risk and don't embrace it do very poorly. Now we get to step two, specialize and focus. I will tell you that I did not get anywhere at all until I got into step two. I was a jack of all trades and a master of none. I was your typical student. I jumped into this investing thing as hard as anything I've ever done in my life. And within 3 months, I had probably 60 positions in my brokerage account. I had no clue what to do with any of them, but I felt that more activity was better. I was a jack of all trades, master of none. And it wasn't until I literally swept my desk off, closed out all my positions, and said, what is the one strategy that I'm going to master in? And this is after about a year of that. And then, wouldn't you know it, within about 6 months, I quit my job. So this is such a powerful concept. Your competition are professionals. I watched in the Chicago Board of Auctions Exchange, CBOE, traders on the SPX pit would literally stand in 1 square foot of real estate, give or take a couple of inches. They would not move all day, and they would own one thing, one pair, one option, one strategy. They'd sit there all day long, and they'd own it. And you, with your 60 positions in your E-Trade account, are going up against this one individual who's just there to snipe you. They're patiently waiting for the herd to make a mistake and overcommit to an obvious move. They will wait all day. They'll get their move, and they go home that night, and they come back the next day, and they do the same thing again. Now, you, on the other hand, you got dozens of things going on at the same time. You're trading several different strategies using different instruments, different assets, different time frames. You got 10 studies. You're going through the squiggle trader phase. You're wondering if you should add more. You're hoping that the winners compensate for the losers. And you're doing this during work hours, during your job. While you're on a conference call, you're looking at charts. And you wonder why your competition is winning. You're not focused. So what I want you to do is to find your one thing. If you could do one thing for me tonight in through today's presentation, if you can just take one thing from that Doc Severson presentation, it's to go search out Curly's Law in YouTube for the scene from City Slickers. This is this cowboy named Curly, and a bunch of scattered New Yorkers were going out on a dude ranch to go find themselves, and they couldn't find themselves. But this guy had it all together, Jap Gallant. So they asked him, what's the secret of life? He holds up one finger. He goes, one thing, just one thing. You find that out and nothing else means anything. So your job is to find your own one thing. I'm not doing the scene justice. You got to see it. It's only 3 minutes long, and it will change how you look at things. Find me one profession where a rank amateur can compete against a seasoned professional. It's like saying, hey, I just learned I think I can throw a curveball. You know, I'm gonna go up against your Bryce Harper. I think I can get it past him. Focusing on one thing will help you get there faster. And I'm a testament to that. It wasn't until I decided to narrow things down to one strategy, one stock, one chart, one option chain. Boom. Things happen very, very quickly for me after that. It's amazing when you focus yourself into the tip of a spear, how quickly you can penetrate through all the other fog. So step number 2, specialize and focus. You can see how these are building on each other. So number 1 was to accept risk, understand that risk is a tool. Now specialize and focus on what you do. Don't spread out. Don't fill your basket with all kinds of different eggs, even though that's the number 1 thing. Don't put all your eggs in one basket, right? So that's what you hear from people. No, I'm here to tell you the exact opposite. Focus on one egg, one basket. That's it. You can always broaden out your experiences later on. I certainly do. But if you want to get started, if you want to cross that bridge, which you all do, if you want to become independent, you've got to start with one thing. You can't take all of Normandy Beach by yourself. Maybe you can take the 10 feet in front of you, and that's it. Okay, so step 3. Define what your edge is. If I were to meet you in an elevator and we have 30 seconds before we get up to our floor, and if I said, hey, what's your edge? Most people would look at me like, what? What does that mean? What is your edge against the rest of the market that you're choosing to compete against? Most people would say, well, I'm using this, MACD crossover divergence strategy with RSI, blah, 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 blah. No, that's not your edge. That doesn't mean anything. What's your edge against the market? I mean, casinos have an edge of maybe 1% or 2%. And they know exactly what it is. It's a statistical edge. And they ruthlessly execute on that. What edge do you have? So first of all, there's no trophies based on how long you've been at this. If you have 10 years of a market experience or 1 year of market experience times 10, edge is not automatically awarded by length of service. I get people that I meet, well, I've been trading the market for 20 years. Okay, so are you profitable? Well, no, but, and then, you get all the excuses. I was there myself. The market is the ultimate arbiter of truth. Winners and losers, some people are empathetic souls and they're like, well, I don't want to, take money away from somebody else. No, it's just think of it as a big river, just a big river of opportunity flowing by. You're going to grab a thimble or a small cup and just pull out your fair share. That's it. You're not taking it from somebody. Chances are, if you win a trade, it's probably on behalf of an institution that's just buying insurance. That's all there is to it. Don't worry about the other side of the trade. Everybody wants to know what's on the other side. Don't worry about that. But you have an edge against the crowd. What is your competitive edge? When the crowd goes one way, what is your edge to either move with or against the crowd? This is where it's difficult because it's like if you're a trend trader, you're going with the crowd. You got to figure out which way that school of fish is swimming. So trend trading, which is going with the crowd, or time decay, which is going against the crowd buying options, are two standard edges. But being on the other side of a panicked herd is surely the strongest edge of all. Being short in early April, being long over the last 2 weeks, you're going against the crowd. Everybody was bearish 2 weeks ago. How'd that work out for them? Chart studies are not edge. This is what I mentioned before. Mistaken perception is that these chart studies will give you edge. They're just lagging indicators of price behavior. Lagging indicators of price behavior. What you'll find is that those that have traded for long enough usually don't have very much on their charts at all. In fact, it's probably just price and volume. Crude systems that show you everything that you need. System edge, combination of method or the signals plus mindset and money management. This is an old Alexander Elder triad here, is a three-legged step stool. If any one of these three, method, mindset, money management, are faulty or deficient, the step stool falls over. If you got all three of them, it just might give you an edge against the rest of the market if you specialize in it, if you handle the risk. The best edge in my mind is being on the other side of the trade from the investing herd. I'm always trying to figure out who is the herd and what they think. These days, it's kind of easy to see if you just go out on X or Facebook or just interact with people and watch what the average investor thinks. You can see this all the time too in X posts. You'll see guys that run a business saying, hey guys, which is the next direction for the market? Is it up or down? And then based on what the crowd says, usually they're taking the opposite side of that, believe it or not. This is perhaps the most difficult thing to do. When markets are selling off like crazy, you're thinking of going long. And it takes a while to think like that. When markets are ripping to the upside, when they're melting people's faces off, and you're setting up some kind of short position, that's not easy to do. That takes some experience. That takes understanding that risk and being able to assess that trade from a risk perspective and not try to look through it and say, well, I'm scared to do this. So that's step 3, define your edge. You got to have a really good, once you define your one thing, then it becomes so much easier to define your edge. You know what your edge is because you do your one thing only. And now we get to step 4. What do they say? If you fail to plan, then plan to fail. Want to make a business of your trading? Better start planning. Your competition has a fully vetted business plan that measures performance against targets every single day. What's your plan? Well, I plan to make money. Thanks for playing. You may continue to process of funding others' accounts. That's the way it works. This is very, very important. Most people treat a business plan as shelfware. So as soon as they finish doing it, it goes right up on the shelf. Yo, I did my business plan. No, this is something where you literally have to look at it almost every day. Hey, how am I doing against my plan? What do I need to do? What additional education do I need? What resources do I need? How do I need to reinvest my capital to meet the goals of my plan? This is a business that you're running. Don't give it lip service. Treat it like a business. And then, of course, there's the trading plan. Your competition also runs by a trading plan. Most of us do not. Most of us just put trades on and then we figure it out after the fact. Hey, what should I do with this trade that's underwater? What was your plan? I don't know. To make money? you know, you should have one plan for your one thing strategy. It's not that hard, guys. Pick one strategy, dedicate yourself to one thing, and then spend 15 minutes to put together a trading plan for it. Spend 30 minutes to put together a business plan. There, you're done. Create your plan. That's step 4. These are simple, but nobody does these because they don't see the value in it. I'm here to tell you it's part of the path to get to where you want to be. Iterate and improve. So again, what do most people do? You start out with some goals. Most people don't have goals. They have dreams and wishes. Dreams and wishes, which are not goals. They're not specific. But anyway, if you do have goals, maybe you're taking the step to put some rules together. And then you're going to get some results. Now, what did I talk about before? The people that are, trading in this little loop, they put a couple of trades on and they don't work. So the results are bad. And what do? They don't make corrections. Their correction is to quit and go off in some other direction. This is more likely the most important thing that you can do is you've got to have this continually spiraling upward. Every trade that you make, you've got to learn from and you've got to improve. This is the way that human performance works, right? Nobody expects to be perfect from day one, but you can always make course corrections. That's why a steering wheel is on a car. Nobody expects you to go straight for hundreds of miles. You make course corrections with them. So you look at the trade, and this is what I insist from everybody that works with me is like, what's the root cause why you lost the trade? There's always a root cause why you lost that trade. You can always learn something from a losing trade. Conversely, you don't learn much from a winning trade. What'd you do right for that? Well, I entered. Maybe that's it. Maybe that's all it took. If you had an edge, you entered, you conquered your fear, boom. All right, let's work on the corrections. Maybe your goals are a little too aggressive. Making 20% per day on your account, maybe a little too aggressive. Maybe you're using too much money. So going through this iteration process is everywhere. Right? If we go out to sports, what is in Tiger Woods' day, what did he do? He'd shoot 18 holes and he'd go right out to the range because he was unhappy with one element of his game. Maybe he wasn't compressing the ball right. What can he do to work on his wrist angle? Somebody after basketball practice going back and shooting foul shots. It's not only muscle memory, but also looking for small, noticeable improvements. This is their edge. Constantly going through that iterative loop. Or in trading. This is something that I do with the people that I work with. Every strategy, we've got some type of a scorecard for this so that we can analyze the trade and we can look at this and do Pareto analysis on it and figure out where the root causes are. How should we be changing things with this? You should learn from every single trade, especially the losing ones. What can you do differently the next time? And that's exciting stuff. Some people find it tedious, but when you see it actually work, then you get excited by the tedious stuff. A lot of trading is very, very tedious. It's just showing up and doing the work. Understand your score. Understand your performance numbers. Commit to improvement. Be a pro. Keep score so you know what your batting average is. Okay, so step 5, iterate and improve. We're motoring right through these things here. Step 6, this is a little bit of a squishy topic. Build a trader's mindset. Your mindset is everything. And this is where I've had to go really deep into neuroscience. I mean, neurolinguistic programming, NLP, these are new fields that have seen tremendous leaps in progress lately. You're going to hear a lot of things about this, and I think it's all true. You've heard things like the law of attraction, and there's some real things with that. You see basically what you want to see. You will see in the market what you want to see. And I've seen this happen before. This is why people can meet each other in the middle of an intersection with an auto accident, and they both have different stories. This is because of your reticular activating system and your belief system. You will see what it is that you want to see. So consequently, this is why I don't watch any of the mainstream media, because I don't want to be influenced by them, because I don't want to go out looking for what they're telling me to go look for. I want to be able to see the market from a completely independent point of view. So if you have results that don't make sense to you, this is because you're neglecting how your brain actually works. Like, why did I do that? Why did I get out of that trade? It was perfectly fine and I panicked. Why did I do that? It's your brain. So what you focus on expands. And this is a really wild thing. Like if you say to yourself, all right, that's it. No more losing trades. No losing trades today. Guess what you'll get? You'll get more losing trades. That's all the subconscious mind hears is losing trades. If you focus on the negative, you'll get more of the same negative results. Have you ever seen people that have, man, this is the worst day ever. Everything I do today just touches, turns to crap. And their day just spirals down because what you focus on expands. So if you're convinced that everybody's got it in for you, this is what you will do. And, I've been through trading days like this where you start out digging a hole, and the more you dig, the further down in the hole you get. And this is the bad place to be. I've been, been in those bad places I don't want to do that again. So be very cautious about how you think. Stop pushing that piece of string across the table. Learn to pull on it. Pull that piece of string across the table by focusing on what you want, not what you don't want. So you've got to retrain your brain to some degree. That's what my book is about. Your subconscious brain is the core processor of your most basic decisions. It's here to help protect you. It's this inner voice that thinks that risk is bad. But you can't just jack the thing in the back of your head like the Matrix that they do. I know Kung Fu. You have to show it the way by doing the work and internalizing your one strategy. You got to prove it that your trading is not harmful to you. So step 6, build a trader's mindset. Step 7, here we go. This is the last step. We're almost done here. Build the right habits. Success is not a step function. So you don't toil and toil and toil, and all of a sudden you wake up one day and then you're like uber profitable. It doesn't work that way. It's a slow constant. Sometimes there's a long time before you get any kind of altitude. Think of it like almost like taking off, a fully loaded plane trying to take off. It's got tanks are full of gas. This is like the Spirit of St. Louis. It's trying to get off the runway. And eventually what happens is you start to, you can get some altitude. But it seems like you'll never get off the ground at first. But that's due to habits. So think about goals versus system. A lot of people think about goals. Goals can be sort of more like wishes. And I love this. James Clear is one of my heroes. I was able to get meet this guy for lunch right before he got to be a big shot back in 2018, before his book came out. Goals are for those that want to win once. Systems are for those that want to win repeatedly. Or Scott Adams, the creator of Dilbert, put it slightly differently. Goals are for losers. Systems are for winners. So the same thing put in two different ways, depending on how you want to hear your information. So the point here is you want to make things systematic. You don't want to think about it. You want to do it the same way every day. It's your system. Decide the type of person that you want to be. Prove it to yourself with small wins. Ask yourself, okay, what would a professional trader do at this point? How would they act in the face of this risk? Okay, then do the same thing. Every habit that you take is a vote for the type of person you want to be. If you want to be a profitable trader, what would they do? How would they act? What habits would they display? How hard would they work? So get small wins. Now, if I were to say to you, okay, so between today and tomorrow, I want you to get 1% better at your strategy, whatever trading strategy that you have elected to do. I want you to do the work to get 1% better by tomorrow. Can you do that? And most people would say, sure, 1% better. Hell yeah, I can do that. Okay, so we come back the next day and you're definitely 1% better. You're on the path. And so I said, all right, tonight, do it again. And then the next day, and then the next day. If you get 1% better every day, after a year, you're actually almost 38 times better at what you do in terms of just efficiency. That's the way that the math works out. Whereas if you get 1% worse every day, you go down to basically zero. This is the aggregation of marginal gains. So it's being able to build on, it's compound interest, guys. It's the same thing. It's being able to build on what you do. So think about, building a house. You don't build a house. You don't start by putting the second floor up here. This is what we all want. We all want to start with the master bedroom. And then we wonder why it slams to the ground when we build it. You got to start with the foundation first and work your way up. As long as gravity is a thing here. The human mind craves steady progress. And even small wins count to keep you motivated. So don't neglect the small wins because it's part of your system. And I look for that every day. I get little tiny wins every single day, and it keeps me motivated. All right. So here's a couple of books. James Clear, Atomic Habits. If you haven't read this before, this has been on the New York Times bestseller list for the last, 7 years now. This thing, it's a monster of a book. It's great. And it's really well written, and he's a great guy. And Scott Adams' book is also very different. It's the same thing, but it's a very different sort of more of a wry twist on things that it's the Dilbert twist on things that only Scott Adams can do. So step 7, build the right habits. Okay. So that is the very narrow path that I think is required to get into profitability. Let's summarize real quick. I'll get you guys out of here. Performance improvement is really about taking one step at a time in a progression. So step 1, we talked about learning to use risk as a tool and not something to fear. And then we said step 2 is specialize and focus. Find your one thing. Go find that video, guys. Seriously. It's 3 minutes long. You'll enjoy it. Accelerate your progress by defining and then focusing on your one thing. You can define yourselves. You can tell people, this is what I do. This is me. I have found myself. Step 3, define your edge. Once you define your one thing, your edge will become apparent to you after iterations. Define what your edge is against the current character and action of the chosen market. It will change. Step 4, create your plan. Business plan and a trading plan put you into play. Step 5, iterate, improve, constantly look for improvements. This is how successful people work within businesses. They're always looking to get better at what they do. And this is easier if you're only trying to do one thing. Think about businesses that, I mean, everybody knows a little shoe repair store that's in their town, even though they're more rare these days. But those guys stick to one thing, and that's the only place that you can get those done. That's the only way you can get a pair of shoes resold. Is that you can't go into Walmart and do something like that. Walmart does everything for everybody, but they're not going to fix your shoes. Or if they did fix your shoes, they do a terrible job. So find yourself, iterate and improve, get better at what you do. And then step 6 is to build a trader's mindset. Guess what? If you focus on one thing and get better every day at something, learn from your mistakes, continue to improve, process risk in the right manner, and start to build an edge at this, you will build a trader's mindset. You will think differently about risk, and you will be proud to go against the crowd. It will be part of your makeup. And then step 7, look for little habits, little improvements, the aggregation of marginal gains every day. Okay. There we go. Now, you may say, that sounds awesome. How do I do all that? If you need help with the 7 steps, this is what I do every day. I run a trading room, a 12-minute trading. So we get together in the morning, we hang out for about 45 minutes, we email each other, we do whatever we need to get better at what we do. That's a 12-minute trading. My goal is to create consistent income in the markets through, generally we're selling options. Occasionally we'll buy them, but generally we're selling them. So I have a live daily income trading room. Starts at 9:20 Eastern time. All trades are communicated through either email or SMS. Trades can be placed with small or large accounts. We accommodate anybody. We do one thing, we do it well every day. We have a couple of different strategies that we use differently depending on what the market is doing. We adjust our approach to match that of the market. We include online strategy courses too. And it's like a full trade coaching session every day. So if you go out to 12minutetrading.com, live daily trading room, or if you go into just services, you'll see it under services, the live daily trading room out there. And I'm going to show you a way to get it for cheaper. What you'll get with the 12-minute trading live daily trading room. Again, we're going to go live with me every morning. Strategies designed for every market. This has been an exceptional year so far. We've seen every type of market condensed within the last 5 months. We've seen quiet and trending markets. We've seen, screaming bears to the downside. We've seen huge distribution. We've seen enormous accumulation days. We've seen just about everything. So if that blows your mind, we've been through it before over the last 20 years. You got a student portal, which everything is organized through, and we give you the trade alerts and trading tools so that you feel like you know what's going on. Normally, this costs $197 a month, which for what you learn from there is a lifetime skill. But if you sign up today, you can get that for $147 a month with the coupon code SAVE50. Cancellation is no hassle. You can sign up for a month, learn everything that you want, and then give us the queen wave and off you go. Or you can hang around. A lot of people hang around for a long time. 12minutetrading.com/live daily trading room. And again, if you use the coupon code SAVE50, that'll save you $50 a month. 12minutetrading.com live daily trading room. My name is Doc Severson at doc@12minutetrading.com if you have any questions. And I'll stick around here for a couple of minutes if you have any questions. Let's see. Case has got a question. Mostly options and not futures. No, I don't do any futures trading. I used to do some of that in the room environment, and then people didn't know how to people would move their stops and they get into trouble, and I just don't want to be part of that. So it's a very interesting way of trading, but I think it's so much easier to manage risk if we're using options. Any other questions out there? Any other questions? Okay, well, hopefully you've heard something about yourselves tonight. Like everybody to me goes through the same progression. It's just where you are able to break through the wall and keep going. And everybody's going to have a different breaking point of hitting that wall where it seems like you're just not making any distance, right? And so maybe just signing up for a service for a month will give you that push that gets you over the edge. You never know what it is. Everybody's different. What is fractal? Fractal is where you have, do you ever notice if you look at a tree? So if you look at a tree, which has got some branches on it, so main branches on it, okay? Each one of those branches becomes like a little miniature tree itself. They've got little mini branches on it. And then each of these has got little mini branches on it. So each one is a replication of, so something bigger is a replication of many, many times of something smaller. And how many members do you have and how do you trade every day? I don't know how many members that we have. We've got a very small crew that interacts on every day. So it's no trouble getting your question and answer. But the point behind the fractal thing is that when we have a larger time frame move like this, you often see smaller patterns within larger patterns as well too, and it helps us understand what's actually happening with the market. So it's kind of like, what's that expression? You just asked me how a watch works, and I'm trying to explain fractal. It's in my book. It's another way to look at it, but it's something that we talk about every day in the trading room.
Hey Doc, yeah, I tested it too. It says that code is expired.
Oh, okay. Well,
Do you want to just have people email you and you can?
yeah, that's fine. You can just email me and we'll work through it, or you can sign up tonight and we'll rebate you. We'll adjust your rate. We'll take care of it. We're easy to work with. Okay. Well, everybody, thanks very much for your time and attention, and I hope to hear from you guys and see you online. And thank you very much, Dave.